Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the day trade. You can see a mild negative on the Nifty, 24,300 although with us right now. And the Nifty Bank is something that is a weaker link in the markets right now. About half odd percent can be seen lost there. About 295 odd points of a decline for the banking index. Well, the market breadth has also turned negative with most of the sectors also declining in trade, especially PSU banks, consumer durables, metals and pharma seeing sharp declines coming in. It's only the FMCG, oil and gas and the infra space stocks that are still holding up into the green, and also the PSE index, the Nifty PSE index, that's up by about 1.3%. So strong gains across the PSU pack is something that you can see. ONGC, HDFC Life, ITC, Hindustan Unilever and Wipro are the top movers on the Nifty right now, while the top drags include names like Divis Laboratories, Titan, Bharat Petroleum, JSW Steel and Shriram Finance. But let's get you understanding as to how should you be viewing this current dip in the markets. Will it extend further? And of course, as we approach the markets, the budget now, what should be the strategy that you will have? Joining in is a very special guest with us. Mr. Sudeep Bandyopadhyay, the Group Chairman of Indie Trade Capital is with us. Warm welcome to you, sir. Always a pleasure to host you on Business Today. Of course, we now have the final date on the union budget. All eyes are now, what will happen really 11 sessions from now on into the union budget. What according to you, sir, will the stock markets be really expecting from the upcoming budget, and how should an average retail investor now position their portfolios?
Good afternoon. Well, I think before even the budget, corporate results will start coming in towards the end of this week, and that is one thing which the market will kind of keep monitoring and reacting based on the results. Q1 results, while should be as by and large as per expectations, there are a lot of thoughts, a lot of views around IT, a lot of views around FMCG, and of course construction infra. We'll have to wait and watch how things pan out. As far as budget is concerned, I think usual suspects, which is the infra construction, housing, there are a lot of excitement around that. But beyond that, one sector which we believe should attract some attention from government for some measures is the fertilizer. I think this is one space where a lot of reform measures are probably in the offing. The government has been engaged in extensive consultations to streamline or further streamline the fertilizer subsidy and fertilizer delivery mechanism. We'll have to wait and see. I think the stocks ran up quite a bit. Of course, it was to an extent on the back of the rumor that GST exemption or some GST relief will come for fertilizer. That didn't materialize, but the fact remains that this is one sector which is poised for some structural change, whether in the budget or maybe sometime around or later. So from a long-term investor's point of view, this is one sector which we believe investors should definitely look at. Coromandel International is our favorite and can definitely be looked at considering the wide array of fertilizers which they are producing. Also, they are into agrochemicals, and that's one other area which should do well provided the monsoon continues to remain robust.
Absolutely. So the entire fertilizer chemical space seems to be a buzz with action. Even today, stocks like FACT, GNFC, GSFC, they're all running. And what Sudeep sir has mentioned is Coromandel that we will continue to keep an eye out on now as well. Apart from this, the PSU space that continues to drive up even higher from here. The kind of moves that we are seeing across the railways pack, for instance, in trade today. Defense has, there is no let up in the kind of, moves that we are seeing across this space as well. Power financiers, power space as well. There is a continuous move up. There is a lot of FOMO in the market that, people are feeling that, now they've run up too much and we are not able to participate. And every time we feel that there is an overheating of sorts, the stocks run up again 5-10 odd percent. How should an average retail investor deal with such kind of a FOMO within this entire PSU pack, sir?
Well, as far as defense and railway PSU stocks are concerned, I have been advising a bit of caution. I think these are good companies. They have got fantastic business prospect, a strong order book, but the valuation has run quite a bit. And the way they are poised now, I believe that it'll take some time before they take the next leap. I mean, we have been proven wrong many times in the recent past, and these stocks continue to gain momentum. but I still will recommend investors to be cautious as far as railways and defense stocks are concerned. I'm not saying these stocks are bad, but it'll take some time before they should, go up once again. That's the point here. As far as other PSUs are concerned, we are bullish on the power space, and we believe this is one space where there is a secular upswing, and we will continue to witness that. The electrification of the country is almost complete. The power demand is soaring, and we are seeing a fantastic transition from traditional energy to green energy. While this transition is happening, since the overall demand is going up, the demand for traditional energy is also going up. So we are seeing company like NTPC, while the traditional business thermal power is booming, we are also seeing a massive investment and massive activity in the green energy space. So I strongly believe that, let's say, a company like NTPC can be looked at from a long-term investor's point of view. Because this power sector demand is huge and new capacities are coming up on a regular basis, the demand for financing is also huge, and that cannot be met by commercial banks. So the power finance companies, whether it's BFC, REC, IREDA, will be in demand and they will continue to do well. Related ancillary companies, transmission, transformer, all these will also perform well and definitely can be looked at from a long-term point of view.
Okay, understood. So you began your conversation by talking about the upcoming earnings. So that is where my next question will be from. Within the upcoming earnings, where do you see the outperformance can lie, and where do you think there can be an underperformance from? And therefore, how should investors be really prepared to deal with the upcoming earnings?
Well, as far as technology is concerned, we are positive on Infosys and Wipro. I think these companies will surprise us on the positive side. As far as Wipro is concerned, there's a possibility of a buyback also, and that will be a sweetener for the investors. The deal wins are back, so reporting of deal wins also will excite the investors. That's about IT. I think FMCG, select FMCGs will start performing well, and we have seen the quarterly updates and all. So by and large, we know the trend. We believe HUL should do well. So should Dabur and some of the other FMCG companies. One needs to keep an eye on them. As far as cement is concerned,
Yes.
I would say it will be a bit of a subdued quarter because of the demand issue, and also we are in the monsoon season where the demand traditionally is low. But the softness in these counters may be an opportunity to buy from a long-term investor's point of view. Construction, infrastructure, I think they will continue to do well and report good set of numbers. There will be a little bit of slowdown in the monsoon season, but I think Q1 they would have performed better.
Okay. So also, do you think that there is this fear in the markets that there is an onward rally, 5 weeks of non-stop rally in the markets right now, probably upcoming earnings and the budget will continue to drive up the momentum further. But beyond these big triggers that we are awaiting, do you think there will be some sort of a correction which might be even needed after this kind of a rally has unfolded? If at all, then how much correction will come in, and what should be investor strategy? Should one really look at booking profits partially, if not fully, and have some cash in the books right now? Is that a wise strategy?
Well, I think Indian markets are in for a secular bull run. Structurally, we are in a positive zone. And beyond the market structure, the liquidity itself has been driving the rally, both domestic as well as international. We have seen very little net international inflow during this first half of the current calendar year. By and large, it has been flat. If you look at inflow minus outflow, so the money put in the market has predominantly from the domestic investors. I believe during the second half of the calendar year, we will see a lot of funds coming in from the foreign investors as well, and that will ensure buoyancy of the market. Now, as far as corrections are concerned, I think that's a healthy trend. After every upward movement, bit of consolidation, correction is par for the course, and that's a sign of a healthy market. So I won't be too perturbed with these corrections, which comes intermittently, as long as the trajectory at least in the medium to long term, continues to remain upwards. As far as investor strategy is concerned, if you're a long-term investor, use the correction to accumulate by buying into good quality stocks. Yes, if you're holding on to some stock where the valuation has reached a level which is little unsustainable based on performance and the immediate future performance expectation, you can book profit and retain cash to take opportunity of these intermittent corrections for accumulating further accumulating good quality stocks.
Fair enough, sir, and point noted on that front. Let's now talk about some of the themes which actually haven't participated at all, or sectors which haven't participated at all in the recent run-up, and whether there is case in point that there could be value to be found in some such sectors. Let's talk about pharma, for instance. You did talk about some names within the FMCG space as well. These are the spaces that haven't actually performed at all. We did see some bounce coming in from large private sector banks, including HDFC, but again, it seemed like it was momentary because there was soon profit booking at those higher levels again. How should one be really viewing these stories?
Pharma is a very wide space with different, business model for different companies. But a lot of these top-line Indian pharma companies have a significant dependence on what's happening in US markets. Lupin is one company where I think I would recommend people to look at. After a long period of turbulence and underperformance, things are looking up for them in US, and the stock can be looked at current levels. As far as other companies in the mid-tier pharma, Glenmark is one company, and Granules is another company. Both can be looked at. Granule transition is happening from a API only company to a formulations led business model, and that transition should ensure incremental margins and profitability. So that can be looked at. I remain bullish on domestic pharma, and Mankind Pharma comes to my mind with 95% plus business in the domestic market. They have done a commendable job, and the new therapies which they are bringing to the market should give them further wins. So that's as far as pharma is concerned. As far as the other sector, I would mention which has been neglected for a very long time has been specialty chemicals and agrochemicals. This is one space which was bombed out, really beaten down for last 1.5 to 2 years. Performance has been terrible. Chinese dumping, lack of demand, price erosion, everything has happened. Whatever could go wrong has gone wrong. But I think we are at a space where we've seen the worst. Things should start improving from here on, and that's what pretty much we are seeing. Chinese dumping, I think, is coming to an end. The local demand in China is coming back. Demand in Europe and US is also reasonably levels, and these companies have learned their lessons and tightened their belts quite a bit. So under the circumstances, they should be looked at from a long-term investor's point of view. Agrochemicals specifically, I will talk about UPL. Remember, this is the 5th largest agrochemical company in the world with widely geographically diversified business in different parts of the world, and with good monsoon expected as far as India is concerned, and a lot of demand for agrochemicals in different regions, particularly South America, where UPL has a large operation. We believe that things will start turning around for UPL as well. And for a little aggressive long-term investor, even UPL is a good bet.
Okay, we'll note all of those stock ideas that you've shared with us, sir. And many thanks for being with us on this very special conversation. It's always a pleasure to listen to your wise pearls of wisdom that you have to share with all our viewers. And like you have a very sane voice in this, all that noise that we are looking at in the markets right now. Thank you so much. Truly appreciate your time, sir, with us on Business Today Television. Viewers, we'll check the markets yet again. Our markets holding steady at 24,302, and you do have just about few sectors that are holding up, especially it's the FMCG that's made a comeback today. Oil and gas stocks are also holding up. The India VIX is actually causing some trouble with about 7.5% surge at 13.6 levels. That's something that we'll continue to watch out for. F&O big movers, you have Glenmark Pharma, you have RDC, Marico, Gujarat Gas, Godrej Consumer Products, oil and natural gas contribute. So all of these stocks contributing to the gains within the F&O moves on the higher side. On the lower side, when we look at the F&O picture, your Bank of Baroda, Divi's Laboratories, Persistent and Vodafone Idea, which have now slipped in trade today. Let's welcome our other guest also on the show. Brijesh Singh now joins in. He's the senior he's the senior technical analyst at Stock Access. Brijesh ji, warm welcome. Good to have you with us. Do tell us how you're looking at the market setup. Volatility is high, but at the same time, we are now looking at some comeback of the Nifty into the green zone too. Is this going to be sustainable now?
So good afternoon, actually, see, overall trend of the market is still positive, but today market closing might be flattish tone, might be 20, 25 point or 20, 25 point on the downside. Regarding with the support and resistance has been controlled on the broader picture. 24,100 and 23,900 is a support which should be held on for the market for a shorter term that has been considered. Regarding with the resistance has been looking then 24,490 followed by 26,040 or 26,640 or 26,650 would be the resistance. So Nifty has been still in a positive side, not that much negative. Regarding the Bank Nifty has been considered. So Bank Nifty right now is giving a slight indication of profit booking, but it doesn't mean that the trend has been changed. Still with the we look out the shorter term time frame, the chart is still trading with the higher tops and higher bottom formation. For the Bank Nifty has been considered, then 52,100, 52,200 is the immediate support. If that thing breaks, then 51,500, 51,600 would be coming in the place, fair deeper down. But still, till that doesn't break, I don't think anything negative for the Bank Nifty has been considered. On the higher side, resistance lies at 52,750 or 52,800. If we surpass, then 53,200 again would be retested. So if we consider both the indices, then Nifty is on a positive as compared to the Bank Nifty. Regarding with the VIX has been considered just for these from a chart point of view, 14.5 or 15 is a hurdle for the VIX is 16. If we cross, then we can see more profit booking and it might come down. Otherwise, I feel that 15.5 or 16 on the high side, followed by 11.5 on the down side. So still, it would be trading in this range only. And no doubt today we have seen a little bit inching, but I don't feel VIX to be crossed 16 mark, except we might see on a budget the 23rd of July.
Okay, got that. Brijesh ji, the theme that is been in the works today is also railway space. The stocks have rallied quite a bit, and my colleague here, Asim, is with us to give us a sense of what's really taking, how is the action taking place within the railways, and what can we expect ahead. So we'll first, of course, go across to Asim to really understand the big railway moves, and then we'll come to you for recommendations within that space too. Asim, take it away.
Thanks, Sakshi. So the railway stocks are on fire just 15 days ahead of the union budget set to be announced on July 23. Today, RVNL stock was the top gainer among the railway stocks. It rose up to 15% and hit a record high. Other railway stocks which were on fire were IRFC, Ircon International and Texmaco Rail, which hit their all-time highs today. So there are some factors which I would like to discuss which are leading to the rally in the railway stocks. So the railway sector is hopeful that the capex for in the budget will be increased by the government. So in the past also the government has allocated more money to the Indian Railways in the interim budget than in the 5 years leading up to the pandemic combined. Railway expenditure for the current fiscal is pegged at rupees 2.6 lakh crore, and the total spending between FY15 to FY19 was rupees 2.2 lakh crore. Meanwhile, Antique Broking said that this should directly benefit companies with increased wagon procurement such as Titagar and Jupiter wagons. In the infrastructure space, they find RVNL and Ircon are set to benefit from these moves. Also, there is a report which said that railways are set to become the next significant investment focus, with road and highway construction spending nearing the end of its cycle. Also, last week, Ministry of Railways said that they plan to make another 10,000 non-AC coaches in 2024-25 and 2025-26 to meet the increasing demand and enhance passenger comfort for the common man. So, the ministry plans to roll out 4,485 non-AC coaches in the current fiscal and another 5,444 of these in 2025-26. Back to you, Sakshi.
Okay, got that. Thanks a lot, Seem, for all that update. Well, Brajesh, you heard the kind of moves that we've been seeing all across the railway space, and it's skyrocketing now. Where would you continue to chase the momentum, and where would you book out profits, and where are the signs of cooling off from this rally coming in?
So, Sakshi, whatever stocks we have been discussed, I have seen like Tex Macro, Tigagan railway stock, or Jupiter Wagon, or RVRM, or IRFC, or any other. So, generally, if I say in a one time frame, roughly around 40% or 50% above the stock has already moved up. But still the stream is well left. So I'll pick up 2-3 stocks which have a more potential to move upside, and the fresh breakout has been seen. Number one is IRFC. Now, if we look on the shorter term time frame of the chart, it has made a base at 180 or 185 zone till it doesn't break. So one can look out that thing as a stop and buy at the current rate of 202, and then play for the target of 235 to 240 zone. Another counter where the fresh breakout has been seen, that is Realtek Corporation. It has already made a smaller time, has already made a base formation in the region of 468 to 475 zone, and a day before yesterday we have seen a fresh breakout at 500 odd level. Now it has been quoting at 537. So for a shorter term time frame, if 505 doesn't break, if that thing as a stop loss, current level can be used to go long for the target of 645 to 650. So there, even if I talk about RVRL, 11th of June, and precising the date when my system had given me a confirmation of that stock can move up. That time it was been quoting at somewhere around 383 or 385. Now it's not in a month time frame, it has shooted up to 564. So roughly around 40-45% has moved up. Still the stream is well left. If it doesn't break 550 to 520 where the support lies, we can see stock jumping towards the level of 625 to 630 zone.
Okay, got that. So that's the railway space and the recommendation on that front that's coming in. Let's discuss a few stocks that are buzzing away. Glenmark Pharma has moved to the top spot within the F&O space, Brajesh ji. It's now 9.8% higher in trade. Even before you joined in, Sudeep Bandyopadhyay was with us, and he talked about granules and Glenmark Pharma as key stories that he'd like to continue to track within the pharma space. Technically speaking, how are you looking at this move coming in on Glenmark within the F&O space?
So if I look about the Glenmark chart, number one, the trend is still positive. No doubt the stock from a level of 1230 or 1240 or level, it has moved up to 1355. So 100 rupees already the base has been formed, and from there we have seen. Now this 1360 or 60 or 75 zone it's a first hurdle zone where the supply might be coming. But the plus sign is the volume. The volume has moved, so does the price has moved. And today we have seen stock and made a 52-week high, also a fresh 52-week high. So I feel if 1235 or 1240 doesn't break, keep that thing as a stop loss. One can look out to buy this counter and play for the target of 1530 to 1540 zone in a couple of months of time frame. Even if I look at the granule chart on a shorter time frame, it's been trading with higher tops and higher bottom formation. 518 the stock has been quoting. So present rate should not be used to go long. Risk reward ratio is not in a favor. So if it comes around 505 zone, then one can look out to go for a long, or even precisely if I say if it trades below 500, then risk reward ratio would be in your favor, much more favorable, because 480 and 85 is a nice support that you should not be breaking in a shorter term time frame. So keep that thing as a stop loss and then play for the target of 600 and 610. But that thing would be at least
Right. Okay, I guess there is. Yes, Brajeshji, we heard you. Now, on that front, Brajeshji, I wanted to also bring up Reliance Industries on the screen for all our viewers. 3200, changed a digit, and it's now at a record high level yet again. Strong moves continuing from last week, Brajeshji. Reliance Industries for you, where is it headed?
so. Number one thing, still suppose someone has missed the rally, present rate can be used to go long, 2800, then followed by 3000. Stock had already made a base. Now when the stock made a high of 45 or 47, we have seen profit booking again going down, and somewhere around 3090 or 85 mark again it has pulled up, and now it is quoting at 3200. So still, number one, the stream is being left. Present rate can be used to go long in a staggered way. Suppose if you want to buy say of 100 rupees, so you can buy it right now at 50, and if it comes down to 3150, again you can buy at that level, keeping a stop loss of 3050 where the nice support has been there, and then play for the target of 3450 to 3500. But that 3450 or 3500, I'm talking about at least minimum 2 month to a 3 month of time frame.
Okay, got that. The other interesting stock that came on my radar is something that we discussed in the morning show also, viewers, and that's the new age internet based stocks Paytm. Finally buzzing very, very sharply. It was up about 4.5% in the morning trade. It's now moved about 7.5% right now. Let's pull up the stock and see the kind of move that we've witnessed today, and understand from Brijesh what's next coming in for 197 Communications. It's a 7.8% strong surge coming in on Paytm, sir.
So number one, the stock has fantastically moved up, somewhere around 7 or 8% it has already moved up, and we have seen breakout at the level of 440. Now we are seeing some profit booking, 470 zone around the profit booking has been there. 460 to 465 level, if it comes, again look for the fresh buying, or suppose someone has missed the rally, then used to go long with the stop loss of 440 and play for the target of 490 to 495. I think within a 1 week or 2 week time frame, we might see stock touching that level of 490 or 495. If it gives closing above 500, then another fresh breakout can be seen, and that can lead to the rally of 550 to 570. But purely for a 1 week or 2 week time frame, 465 around, go for the buy side with a stop loss of 440, and then play for the target of 490 to 495.
Okay, got that. So that's the view coming in on Paytm as well. Let's look at the broader universe to see if there are any other interesting names that we can spot. Fertilizer pack, something that even Sudeep sir was talking about. That's moving very, very sharply. National Fertilizers is now at a 10% move that we can see. Along with it, the entire space seems to be in focus. RCF, Rashtriya Chemicals, is also up by 13.5% in trade. Let's also look at some other stocks like GNFC, GSFC, Fact, for instance. The entire space seems to be a buzz with sharp action. Look at RCF. What a vertical spike that you have seen over there. A strong move coming in. NFL also, I believe there is a similar spike. Brijesh ji, fertilizer chemicals. There was a lot of buzz before the GST Council meeting that probably the GST tax will be removed. It came out to be nothing, and the stocks corrected after that. There is again move now starting to happen, and this is prior to the budget. How are you looking at this space, and should one chase the momentum?
Obviously, one should chase the momentum. If we look out the sector wise, the chemical fertilizer, then today we have seen oil and gas stocks again moving up, followed by the railway stock. Now, if I talk about this few names which you have quoted, NFL, RCF, and FACT, all of threes are, are looking good on the chart. I'll start with FACT. If we look out the chart, it already made a base at around 960, 965 zone. Now it has been quoting at 1118. The present rate can be used to go long the breakout has seen at 1028. Keep that thing at the stop loss and play for the target of 1290 around. I think within a week time frame we can see the stock touching at this 1290 zone. If I talk about RCF now, already today's session we have seen stock making a new 52-week high of 223. Now if it comes at a region of say below 225 around, or 220 to 225 zone, if it comes, then one can look out to go long with a stop loss of 210, play for the target of 245 to 247. And if I talk about NFL, a large consolidation has already been made. 128 rupees around the stock had passed from 25th of June onward. It was was making a base, and today we have seen a fresh breakout with volume. It has moved the 148 around has been trading. So 130 around, keep that thing as a stop loss, play for the target of 170. If it keeps closing above 170, next level would be watched, would be 200. But I feel that 170, 175 ideally can be achieved in a 3 weeks, in a 1 week of time frame, and then we can play for 200.
Okay, got that. So that's the big move coming in within the fertilizers and the chemical space. Viewers, keep an eye out on this space very, very closely right ahead of the union budget as well. Today, we'll also looking at, apart from the railway stories, some of the other stocks that are buzzing within the broader markets. Let me name a few names. Dynacon Systems is up almost 10% higher in trade. Landmark Property, there is a continuous momentum happening. You have Kaya Limited that started to move with that Marico decision of a tie-up with Kaya Limited to market and products, market some of the products of Kaya Limited, and therefore you have been seeing a continuous momentum on Kaya Limited from that time on. PC Jewelers, after a long haul, is up at 10%. You have Suvain Life Sciences doing very well, 10% higher. Stanley Lifestyles, a recently listed company, is up about 10% higher in trade. You have BL Kashyap and Sons, that's about 10% higher in trade today. You have Eveready Industries, that's also a very strong move can be seen. I think about 12% odd or so is the kind of move that we are seeing. McLeod Russell is moving up, I think 9.9% higher. Some of these long forgotten names are coming back to the fore. Suraj Estates, it's been showing a momentum from last week, it's continuing now, 10% higher in trade. Brijesh T, any particular name from the names I read out that caught your attention?
So there are few. If I talk about T stock, McLeod Russell chart has been fantastic. After making a high of 31 rupees 70 paisa, it got profit bouquet has seen that 25 around, and again it has moved up. Stock has been getting up all the important moving averages, and it has a potential to touch 35 rupees mark. So 29 one can go with the long side with the stop loss of 26, play for 35. Marico we have talked about, and we all know chemical stocks followed by FMCG stocks are favorite when the monsoon starts. So 640 around the stock has been quoting, 627 around the support lies. If it doesn't break 627, then we can see stock touching 660, 665 zone around. Suvain Life Science, if I have all the three stocks, if I consider Suvain Life, and a chart is looking very fantastic, and if I'm not mistaken, today now circuit and of 10% making a new 2-week high. It has more potential to go all the way to 160 to 165 with the stop loss of 132. So if I consider all these three, then Suvain Life chart is much promising than that.
Okay, got that. Well, let's again look at some of the other movers. It's 320 almost. In fact, Brijesh ji, why don't you highlight for us one or two stocks that you would be looking forward to carry on as a BTST, STBT trade?
So as I've talked about the stocks which having a chance of moving up. One is IRFC. The stock is looking promising. If someone wants to play for a shorter term bet, or even for I'll say with BTST point of view, then 197 around the support lies, 201 the stock has been quoting, play for the target of 210, 211. Then RCF which we have already been discussed. Stock is still looking promising 229 for the BTST. I'll say keep a stop loss of 222 present rate or 225 around. If it comes, then go for a buy set and then play for the target of 235 to 240.
Okay, got that. So those are the trades that one should be keeping an eye out on for tomorrow. Some kind of a pullback happening within the IT pack also, Brajeshji. Wipro, HCL Tech, Infosys, Tech Mahindra, LTI Mindtree, these stocks seem to be pulling back from the day's low point. And of course, it is the IT space that will garner all the attention this week onwards itself. From 11th, we will start to see the earnings for Q1, and TCS will be the first one to report as the large cap company. How should one be keeping a strategy within the IT pack right ahead of earnings?
So, see, I can't comment much on the TCS. The TCS chart is still, not giving any sign of confirmation on the, on positivity. If I look at the broader range picture, 4050, 4070 is a resistance lies. Support if I talk about 3820 or 40 around is a support band. So it's just trading in the range for the TCS. But if I talk about Wipro chart is promising. We can see further upside in it right now. 540 around the stock has been quoting. So till if doesn't break 527, it has a potential to go all the way to 560 followed by 573 or 574 zone. So if I in all the three, Wipro chart is on the promising band. The trend is positive. Present rate or dip should be used to go long with a stop loss of 527. Play for the target of 560 followed by 574.
Okay, got that. So that's the view on the IT pack as well. ONGC, let's revisit the stock again. It's now at a 300 mark, 4.2% higher for ONGC now. Strong surge, which has led the entire oil and gas space also higher in trajectory. So Oil India, you have GAIL, you have Reliance, you have several other gas stocks also moving up within the energy pack. This is something that seems to be garnering more moves. Brijesh, what next for ONGC after 300 mark is achieved?
So as we have discussed, MRPL or ONGC or IOC, the stocks. If I talk about ONGC precisely, even suppose someone wants to go for a BTST 295, keep a stop loss and play for the target of 307, 308. But for the shorter term bet is been considered, then I'll say keep a stop loss of 290, play for the target of 311 followed by 325 to 327. I feel like in this expiry, the stock might trade at the range of 325 to 330 zone for ONGC.
Okay, fair enough. Let's also look at the FMCG space. More moves coming in, and now the index itself is up by 1.6% higher. It is Marico that's been driving this move from morning, so it's still holding up above that 4% mark. You have Godrej Consumer, Dabur, ITC also pulling up now. It's 2.4% higher, 444. You have PNG, you have HUL, Tata Consumer Products. The entire space seems to be a buzz. Brijesh ji, FMCG कैसा लगता है आपको, and which are the stocks that you will continue to chase?
So already Marico has been discussed. ITC again is a heavy weightage counter. 430 to 436 is an immediate support. I feel like that should be hold on for a shorter term that is being considered. I feel like in a shorter term time frame, stock has the potential to go all the way to 465 and 475 zone for the ITC has been considered. Godrej Consumer stocks look good. From, I think if I'm not mistaken, from morning the stock had already made a bullish engulfing candlesticks and still it's been holding above 1410 or 20 zone. Now it has been quoting at 1427. Keep a stop loss of 1387 for the stocks. I feel the stock has a potential to go all the way to 16 million marks in a 2 weeks to 3 weeks of time frame. Tata Consumer has been considered. The stock has been trading near the resistance zone, 1160 to 65. So I feel like let it cross 1170 mark around. Then if it cross that 1171, then only go for a buy side. Keep a stop loss of 1150 and play for the target of 1210 to 1225 mark.
Well, we will continue to focus on some more big moves that are we seeing right now. PSE index, the PSU index is something that we'll focus on now. REC is the counter that's moved higher. It's now at a 607 odd level, 4.6% higher. We are also looking at PFC, that's now 3% up in trade. We also have the other power space stocks buzzing, so NHPC, Power Grid. These are the stocks that are continuing to show some momentum. Within the power financiers, REC is also now among the top movers within the F&O space. Brijesh ji, REC, PFC, which is the stock that you would be betting on between the two?
So chart wise, I feel that REC chart is much more stronger. 607 around the stock has been trading. Present rate can be used to go long. A little bit deeper the support lies, somewhere around 592, 593 around the support lies. That should be kept as a stop loss and play for the target of 647, 650 zone. There is one more stock which is looking promising, but not from a power sector. There is PNC Infra. If we look out the chart, it has given a fresh breakout, and the previous month high has been tested. 509 around the stock has been tested. 495 around the support lies. Keep that thing as a stop loss and look for the target of 540 to 545 zone.
Okay, got that. So that's the view on that one too. All right, let me also bring up some other interesting names. BHEL is also pulling up 4% higher within the F&O space. What's the next target that you would have in your mind, sir, for BHEL?
So actually, the plus point is what trend has been positive with higher tops and higher bottom formation, whether we look at the daily chart or the shorter term time frame chart. Second, it's been trending above all the important moving averages, followed by the volume breakouts. When the volume breakout with the price has been confirmed, it indicates that it can further move upside. Now 329 around the stock has, it has made a new 50 back in today's session. 318 is a shorter term support, and the short term target is 340, 342. If suppose someone wants to play a little bit on the larger term time frame, then I'll say that keep a deeper support somewhere around 308 around, and then look for the target of 370 to 80. But for the short term bet, I'll say keep a stop loss of 318. Present rate can be used to go long. Play for the target of 345, 342 to 345.
Okay, got that. Well, we'll thank you, sir, for being with us on this show on that note and sharing with us all those ideas that you have for all our viewers. Appreciate your time with us. Thank you. The markets faintly into the green, so 24,339, 24,340, but we'll take it what it has to offer to us right in the beginning of the session, the weekly moves as well. And the losses on the Nifty Bank have also reduced towards the end of the session. So you can see 52,490 now on the Nifty Bank. It's only a cut of about 170 odd points, so a 0.3% decline. So some buying action coming back into the fore. Let's pull up the top movers on the Nifty for all our viewers to really see how things have shaped up. Of course, oil and natural gas, ONGC tops the charts with a 4% move. HDFC Life, ITC, those are the two counters that are also moving up about 2.5% each. HUL, Tata Consumer Products, Nestle. So FMCG names, oil and gas, PSU stocks, railways, fertilizers and chemicals. Those have been the clear focus areas. Within the F&O space, you also have REC, Glenmark Pharmaceuticals. Those are the stocks. Of course, IT made a comeback. HCL Tech, Wipro. These are the stocks that also performed towards the end of the session as well. But looks like we are going to be having a positive close, and that will be something to take in positively for this entire week. Remember, as we move forward, it will be earnings that will be continuing to be in focus. Now let's pull up some of the big buzzers. Paytm very strong surge. We were discussing in the morning, it shot up to 7.5% when I last checked, and it's now at the day's high point at about 8.5% right now. Strong move coming in that one. Apart from this, look at Reliance Industries. The way it has pulled up the Nifty, it's a very, very strong surge that you can see. 80,000 is back on the Sensex, viewers, flattish with a positive bias kind of a close for the Sensex. The Nifty also higher. The Nifty IT is up by 0.1%, so that's also inching up into the green. BSE advances are 1935 to about 2404 declines. So the market breadth is in the favor of the declining stocks, but Reliance Industries is closing in at 3200. But stock of the day, RBNL for sure, from the railways pack, over 15% higher. Ircon International 6% higher. So the strong moves within the railways pack continued. RCF2 pulled up in the latter half, 13.2%, very strong surge coming in. National Fertilizers also up about 12%. That's the kind of move that we are seeing. IRIDA, remember IRECBFC is something that we checked, but IRIDA has also moved up 7.7% higher in trade. A very strong surge that's coming across the board. And there you have it. The screen has frozen and 24,332 is where we are closing in at that. We will wrap the markets right here, but do stay tuned on to Business Today to catch all the updates from the world of business and finance beyond the stock market hours. Many thanks for tuning in.
Adani Enterprises and Adani Ports have not even climbed above their June 4th highs, which again points to relative underperformance across the broader market and of course Nifty. So what do you think is holding